We have the jobs report this week and tariffs are coming. I mean, what could go wrong? Probably nothing. Probably nothing. Hey guys and gals, my name is Blake Morrow and you are listening to the week ahead video for, I guess what this would be March 2nd, 2025. I hope everybody's having a great weekend. It's going to be a crazy week next week. It was a crazy week this week. It seems like it's a crazy week every week, which also reminds me, I'm going to have a conversation with you guys here in a few minutes. There's a conversation I had with the Forex analytics community, so make sure you stick around for that. It's important. It's kind of how I've been really attacking the markets as of late, and it's made a big difference in what I'm doing, and hopefully it's going to make a big difference in what you're doing. But before we get into that, we're going to talk about all the things that are happening this next week that could move the markets. We're going to talk about the tariffs. We also are gonna have Nick here from Trading Analytix. He's gonna do a small video, just excerpt talking about the S&P, Nvidia, and things that happened in the equity markets this week. And then, obviously at the end, I'm going to give you my 3 best setups for this next week. And I'm also going to review the ones from last week as we normally do. Now, also, I'll be covering some other markets like gold, S&P, what's happened with Bitcoin this week, which has been a lot. So make sure I'll stick around. It's going to be a really great video. So let's get to it. And we're going to start off with what happened this last week, what happened this last week? What is happening this next week in the markets? And we could start off just by understanding that on Monday, it's going to kick us off with some pretty important data, and you can go over here to the calendar and follow along via the Forex Analytics application. But we have the ISM manufacturing data. Now it is a jobs report week, so obviously there's a lot of data that we're going to be watching this week that could move the market. Starting off with the ISM services. Considering the economic data is starting to soften here in the United States, it's really important that that we're paying attention, especially to the ISM, even if it's manufacturing data. So Monday, it's going to set the pace for the remainder of the week. Now, also, one of the other things that we should be talking about is throughout the weekend, we could be getting some headlines, obviously, regarding tariffs. That's something that's been a risk pretty much every day. Almost every day, just because, the Trump administration or Trump himself, he'll, mention something about tariffs and about that they're coming, and then the market gets a jolt of volatility. And that is great for traders, but just keep that in mind that that's possible even over this weekend as we approach the looming deadline on March 4th, this next week. On Monday night, we're going to have Australian minutes, and don't worry, I'm going to go back to the U.S. data and the U.S. dollar as we get into the week, because we're going to be talking about the dollar index. We have on Monday night though, or Tuesday morning in Australia, we have the Australian meeting minutes, and then we have retail sales as well, also out of Australia. Now, if you let's take a look at the week ahead charts that we have here. Now, what we've seen in the Aussie dollars, we've seen an epic failure from the 38% retracement. You can see last week I was like, we're going to have major resistance up here. You want to talk about, I mean, I know you guys watch the week ahead video every week, and you hear me say these levels, but I mentioned the 38% retracement. That's why it's highlighted here. That 38% retracement was at 64.17. The high, it was 64. What is the high? 64.04, 64.08. So when I tell you how important a resistance level is, and we see a rejection like that's well, I'll just pat myself on the back. That was pretty epically huge. Now, I know some of you traded it. I know some of you traded it probably the other direction too. That was an epic fail. And keep in mind that China is going to be, there's going to be a lot of, there's going to be more tariffs coming for China. And that's one of the things that propelled the Australian dollar weak, a much rapid rate. But, one of the ways I'm looking at the Aussie right now is that we have this rising, I think it's going to be a rising channel. And I'll just draw it out for you, because this is the way, if you go over to Forex Analytics, this is the way I'm viewing it too. And you can see it over here on the daily chart. As we are breaking through support, we're coming down towards channel support. That's the way that you view it when you're on the platform. And that's the way I'm going to show it to you right now. Now, with that being said, and I'm happen to be on a 4-hour chart, you can see that we have, we're probably very, very oversold intraday. You can see relative strength. I'm trying to just draw a fib here. There you go. So we're going to probably get some major support around the 8170 level. Now, the question you guys are probably asking right now is, well, should we be buying it down there? I think that's going to be a bounce level. You can see how intraday RSIs are so oversold. But look, I've seen markets stay oversold, be oversold, stay oversold. And if there's a reason for them to do that, which happens to be with, increase in Chinese tariffs, which is going to inadvertently impact the Australian dollar lower, yeah, you could see it stay, oversold for a longer period of time. So be careful buying down there. It's just, I think that should be some pretty key levels of support going into this next week. So right through here. Now, whether we can bounce from there or not, we'll see. Now, moving right along on Tuesday, we need to talk about the dollar yen. BOJ Ueda, he is speaking at an IMF event on Tuesday. Now, we're going to talk about the US dollar, Japanese yen a little bit more greater detail as we go into the review section of last week's topics. But what I mentioned to you guys last week is we were going to get a rally to 151. Today we hit a high of 150.99. So if you go back to last week's week ahead video, I was off by 1 pip. Right. Now, the trick is, did you trade it? This guy did. Anyway, actually, I got short of 150.95 today, just so you guys know. So, and if you want to see me in that position, all you have to do is go over here to the trades room in the Forex Analytics chat room, and you'll notice right here my open position was 150.95. So if you want to follow the trades that I'm doing, and not just me but other traders, why don't you enroll in Forex Analytics? It's $1 for 10 days to try it out. After that, it's $150 a month. You make the decision. 10 days. Jump in the chat room. Jump in the trades room. See that I shorted the dollar yen at 150.95 at the precise moment when that happened today. After, by the way, that happened right after the PCE data. All right. So yeah, that's where I was selling dollar yen. Hopefully you were too. Anyway, reason why I'm mentioning all this is because one of the things that's happened with the yen this week is we've seen a move high or move lower, with 10-year yields, and you can actually see it here. This is in red. This is the 10-year yield. This is the dollar yen. The dollar yen has failed to go down when yields have been dropping the last couple of days. Now, it's not a perfect correlation, that never is, but that is something that definitely has my attention, because if yields do bounce, then the dollar yen might trade up towards 152. Just keep that in mind, okay? Again, Ueda is speaking on Tuesday. Tuesday also happens to be tariff day. That's the day that tariffs are set to be implemented on Canada and on Mexico. And I'm going to just cover those really quick because I think they're important. The dollar Canadian, as we talked about last week, has continued to squeeze. It squeezed hard. That was something that we've been waiting for with the dollar Canadian. I played it to the long side. I got out a little too early, but the dollar CAD could continue to stretch its legs. Now, I want to pull up something on this chart that is not seen here, but I want you to see it. Okay, we're going to go like this. Okay, and let's remove that. And let's remove this. And let's do this. And if you draw and you connect those highs right there, that means the underside, and let's move this here. The underside of this trend line, which comes in right around the 145.50 level, this might offer resistance on the way back up. Now, I'm not here. Let's get rid of some of this stuff because it's a little messy. I want to clean it up. Okay. So, and let's remove that too. We don't need that for now. We don't need that. We don't need this. We don't need this. And let's remove that. Okay, so if you take this high to low, right? There's a 618 retracement, 145.50. That seems like, and the underside of that trend line is about where we might go this next week. The market is now priced in that tariffs are going to be hitting Canada, and my guess is they are going to hit Canada. The Trump administration is going to implement those. Now, will there be some negotiations, following the tariffs being implemented? Of course there will be. Will Canada be able to appease, the Trump administration? Maybe not. But even a talk and conversations will ease the pressure off the dollar Canadian upside. So I want you guys to watch the dollar CAD next week as it approaches that 145.50. I think it's going to be pretty important resistance. And also with Mexico, you guys have known this. I think I've said it quite a bit on the week ahead video here. I know I talk about it on a daily basis. If you don't know how to find me and the team every day, all you have to do is go to our website, go here where it says webinars. We have 2 free webinars. One's the Flow Show, which Ryan Littlestone and K-Man, they broadcast in the early morning hours in Europe. The F.A.C.E shows every day at 8 a.m. Eastern. It's been that way for the last 8 years that we broadcasted that show. You'll find myself and the rest of the team there. Well, on the F.A.C.E show, almost on a daily basis, but also on, I'm sure I mentioned it here as well, most people know that I want to buy Mexican pesos. I actually believe the dollar Mexican peso is going to move lower. Why do I believe it's going to be moving? It's going to be moving lower because I believe that Mexico is going to work more hand in hand with the U.S. And what you've seen here since this false breakout, you've seen the dollar Mexican peso have a very shallow bounce, which does suggest that at some point the dollar Mexican peso is going to break down. So, considering that this is going to be a big tariff week, we do need to be watching the dollar Mexican peso in case we do break below 20.20 or below 20.00. We start breaking below those levels, and the Mexican peso is going to strengthen dramatically. Remember, Mexico has got a lot. They have a lot to work with as far as the U.S. goes. You've got Chinese manufacturing in Mexico, EV cars, fentanyl, drugs just in general, immigration, and it seems like President Sheinbaum in Mexico seems like she's willing to do what the Trump administration wants and then some. So therefore, I believe Mexico is going to be able to avoid a lot of this. Therefore, it's going to also strengthen the Mexican peso eventually. I'm just waiting for my chance, and I believe some of you guys and gals may be as well. All right, let's continue on. Because that's going to be on Tuesday night. We're going to be getting updates about what's happening with Mexico and Canada and with the tariffs. Wednesday morning we have Swiss CPI. I've been trading the Swissy a lot, but we're going to continue on because we got so much to talk about today. Thursday we have the ECB. Now, the market is expecting the European Central Bank to cut rates. Now, last week I was expecting the euro to make it all the way up to 105.75. We didn't quite make it there. Why? Well, the Trump administration, Donald Trump actually started on, I believe it was Wednesday. It was on Wednesday right here. On Wednesday, he started talking about tariffs, and then he basically said, Europe, we're coming after you too. 25% tariffs. So the euro, just as it was looking like we were going to make our way towards that 106, 105.75 level we talked about last week, which I was really hoping we'd get there. Yeah, well, it stopped shy and we reversed. Now, that doesn't mean all is lost for the euro because the market is expecting the ECB to cut rates, to continue to cut rates. They are going to probably cut rates at least by 25 basis points, but how dovish is the ECB going to be, especially with some inflationary pressures that are coming in? I'm gonna leave it like this for now, but I'm gonna come back to the euro a little bit later. How I see the euro right now is the euro is making a big base. What does that mean? Well, a big base kind of looks like this. I believe the euro, oops, I didn't want to do that. I believe the euro dollar is basing right now, and that means dips are probably going to be bought. So I want you to keep that in mind as we move along through the rest of this video. Thursday, we have FOMC Waller speaking. Friday, we have Mexican inflation. I already showed you guys the dollar mex. And Friday, we have Canadian and U.S. Well, we have Canadian jobs report, U.S. non-farm payroll, and Powell speaks at 12:30 noon, right after noon, Eastern in Chicago. So keep that in mind. Now, I do want to talk about the dollar index as we have the non-farm payroll. The dollar index has been a really interesting animal because what it's done, and I can just leave it just like that. And by the way, as you guys know, I use a few different lists. I use the week ahead video list here on this particular video. The reason why I change out the list because I want you guys to see what I drew the previous week without any interruptions, because throughout the course of the week I actually use a different list for all the analysis on Forex Analytics. When I'm uploading the analysis here, you guys see this is a certain list that I use. Okay, I do that for a reason because, again, I want you guys to see, oh, Blake last week he talked about the dollar Swiss at, breaking down through this level. This is a couple of weeks back, as you can see. But I don't delete them until the next time we talk about them. So this way you have a good reference point since the last video that you saw on the week ahead. The dollar index is a different animal because it is the dollar index that I use for pretty much every subset of charts that I have. So that's why it changes a little bit from week to week. Now, one thing that's really important about the dollar index, if you take this high right here, okay, and that low, the 38% retracement, we pivoted off of that the last 2 weeks actually, and that comes in around 106.30. We bounced off that. Now we're getting close to the 50 DMA and almost the 50% retracement. I still believe the dollar is in the top of processing. It's late on Friday afternoon, guys. Just bear with me. I believe the dollar is in a topping process, but we'll see how far we can stretch our legs. If we can make all the way up to 108.52, that is also a 618 retracement. It's also a 618 retracement and horizontal resistance. So if the dollar index can do this, I would be happy because I would be glad to short the dollar index somewhere up here. But will we get to see that next week? I think it all has to do with the jobs report and the tariffs. Now, because we're talking about non-farm payroll, believe it or not, the market is still looking for the jobs market. Economists are expecting the jobs market we're going to create 150,000 jobs. I think that the data is starting to show some signs of weakness. That estimate might come down a little bit throughout the course of the week. The bottom line is the dollar is going to be up against some odds to beat non-farm payroll next week. I haven't been foolish enough to bet against the jobs report in a while, but this is a jobs report I'm going to be watching carefully because in any miss, if the labor market looks like it's weakening, the dollar will swiftly turn around to the downside. So keep that in mind. Now, I want to, like I told you guys, I told you guys I would spend a few minutes talking about something that, and before I bring in Nick from Trading Analytix, I wanted to discuss this with you guys because this is something, in my opinion, that has, how should I say, it's really changed the way I approach the market the last couple of months. And I want to talk to you about it because I think it hit home with a lot of traders from our community. Now, we have a couple private shows that go every day, which are the Morning Edge and the daily roundup. So if you're inside the Forex Analytics community, you're a trader and you're in our chat rooms, you have the ability to listen to those. You can actually go listen to the recordings. If you're not around, you can see them right here. They're located in the platform. This is where you get to the recordings of each one of those shows. Well, earlier this week, I was talking to to our traders on the Morning Edge, and I said, look, the way I'm approaching this market, you can clearly see it in the trades room, is I am been a scalper, like it's been nobody's business. We have increased volatility in this market, and as we have increased volatility in this market, it is allowing us as traders to take advantage of that every day. But more importantly, I'm sleeping better at night with this increase of volatility. You can see ever since the Trump administration has come in, which is basically right here, you can see that that volatility has been not subdued. It's been elevated. But that's great as a trader. As a trader, you want that. But that also means that it makes it a little bit harder because every day, like intraday, for example, today, Trump had a press conference and started talking tariffs again. And this is after this morning's data. What we saw in the euro is it absolutely came under pressure. Those headlines come fast and furious. And if you're not just being flexible in the market, you can really get sideswiped in the market. It was easier under the Biden administration, and I don't mean to be political here, but there's one of the names that was being called was Sleepy Joe Biden. You could reference him as that if you wanted, but I'll tell you what it was. It made for a sleepier market, right? And it made it easier to trade macro themes in that type of environment. I could be in a position, I can sit there for a week, several days, and let it grind out, and I seem smart. That's because nothing really would upset the apple cart. The markets would just kind of go where they needed to go based on the theme, the underlying theme that's driving the market. Today's market's different than that. Today's market is a volatility-infused market. So being an active trader right now, it's kind of gone back to my roots. I'm a really good trader. That's one of the reasons why that everybody over the last 20 years has been looking at my bias chart. We do it together as traders. We put all these key levels together every single day. Why? Because traders trade off of those levels. They queue off of the crude import level at 68.25. They know that Bitcoin's major support at 75,000. They understand that the dollar yen is going to have massive resistance at 151. If you know those levels, you can trade off of those levels. And that's what makes trading great for all of us. But you have to position yourself more as a trader. And really, that's what I've done over the last month. And I've had comments come in from our community that said, this is really refreshing. I've gone back to my trading roots. Yeah, you don't have to worry about trying to be an economist. You don't have to worry about trying to figure out, what's the ECB going to do versus the, interest rate differential. You know what? Let's just trade the levels. And the Trump administration, like them or loathe them, has infused volatility in this market, which is making it great for traders. So, you want to know how to take advantage of it? Well, go check out the Trader Funding Program. If you want to know how to get funded as a trader, don't want to risk your own money, go check out the Trader Funding Program. There's two ways you can access this. And guess what? You can be a U.S. trader and get instant funding, or you can take a one-step assessment. And one-step assessment, look, if you know how to make 10% and you don't think you'll lose more than 6% in an unlimited amount of time, that means you start trading, you have to make 10% without losing more than 6% of your equity on your high water mark. That means every time you make money, your 6% moves up, right? You make money, your 6% moves up. You can't lose more than 6% from your rising equity. Well, if you can do that in an unlimited amount of time, then check out the Trader Funding Program. This is a way that you can access larger amounts of capital. We need volatility as traders to take advantage of this. You can go for a $25,000 account if you don't have $25,000 to trade, or you don't have $1 million to trade. You can go all the way up to $1 million account. So you guys, these are the markets that make trading awesome. It's volatility. So I hope that resonates with you as a trader, because that's what we're here to do. We're here to make money on a daily basis. Sometimes we have to be a little bit more quicker on our feet. And this is that type of environment. But being quicker on our feet means there's more opportunities every single day for us as traders. All right. I hope that resonated with you. So right now, make sure you all stick around, because Nick from Trading Analytix, he's going to do a quick little summation for you in the markets.
Hello everybody, my name is Nick Groves with Trading Analytix. Blake, thank you so much for passing it over to me. I'm going to go ahead and talk a little bit about equities. So what a week we just saw. I'm sure Blake's diving through what's going on in the dollar, but we've seen a significant breakdown in the equity market. The NASDAQ has broken very, very key support. You can see this 21K level was hit about 5 times, broken down once, but this level was so important, and the market did break it. The issue is that we've been relatively range bound for a while now, and people who have been long aren't liking this, and they might want to bail, right? And the issue is, if we bounce up here to the previous breakdown level, will we find sellers here to actually bring us lower? I think that's very possible. You know, there's been a lot of talk. Are we about to get that big correction that everyone's looking for? What we're seeing right now is definitely showing signs of that potentially happening. But here's what I will also point out. If you take a look at this extension here, we just came down to the 127% extension. If you also come back and look at this from a monthly time frame, the NASDAQ NQ just perfectly tagged the 38.2. The 38.2 is the continuation fib. So if we can clear back above 21K, this does become a more difficult beast than it already was. And I'll also point out, take a look at the S&P. The S&P fell down to the 786 and also tagged this trendline support that capped us throughout, December and January. So are we going to see people step in now after this decline? I think it's going to be really telling on what the NASDAQ does around this 21K level to see where we're going from here, because I do think it is definitely a possibility that we get a much deeper correction, potentially back near 6,700 or so. You can see I'm looking at that level because it's right near in between a 38.2 and a 50, which the S&P does tend to love, but this was a bit of a breakout point. So I think there's a chance that we come down here if these lows don't hold. In order to figure out if those lows are going to hold, we have to start diving into some of the Mag 7. And I'm going to talk in the video really quickly because I know that it's been very focused on this week. I would say earnings came out well, and the market can do with the earnings what it would like, but it fell, right? But it did hold this support that dates back from February of 2024, tagged it, came near the 786, a little bit below it. But if it holds this and gets going, it's that same conversation in the NASDAQ. If it gets back above a certain level, it becomes a different ball game. There's definitely still some signs for concern. I'm even seeing a bear flag set up in this S&P right now, and that targets us quite a bit lower, back near that target that I'm looking for around 5,700. So there's a lot to talk about and uncover. I'm going to walk through the S&P, NASDAQ, Dow, and all of my Mag 7 charts for you guys in a week ahead video on Trading Analytics. That's coming out this weekend. It should be in the link. The link should be in the description below. Please check it out for me. Give me a thumbs up if you don't mind. And thanks so much and have a great weekend. Cheers.
Thanks, Nick. And you know what? Nick is also putting together a longer form week ahead video. If you're watching this video on late on Saturday, you should be able to find that video down below. And if not, just follow his YouTube channel, Trading Analytix, that YouTube channel. You'll be able to see the week ahead video there. He's doing a little bit longer form this week because he's got a lot to talk about. All right, guys. So we're going to cover a few different markets before I talk about the top 3 setups, trade setups of this week and of last week. All right. So let's first and foremost, let's talk about what happened with gold this week. So gold is starting to break lower, and that is worth noting. I think I've told you guys this. I've been a little nervous about gold because I haven't had a bearish argument. And because I haven't had a bearish argument, that's been one of the more riskier things I think about, the gold market just in general. But what you're going to notice in gold is we've come off 161% extension, and we are about ready to attack very critical support at 2,800. Now, I think this is a bounce area for the market. That means I think the gold market will bounce there. The risk is, in my opinion, is if we get below, whoops, that's not what I want to do. We get below about like the 27, 25 level. We start getting below that channel support, then we have a bit of risk in the market. And you can see relative strength has been divergent, okay, in this whole move. So we start getting through channel support. That's where it gets a little ugly. All right, so that's gold. We'd been talking about a possible double top and stalling up here, and it really is. All right, now crude oil. Crude actually made a brief break lower, but I want to show you something very important about the crude oil market. And you know what I'm going to do right now? I'm deleting everything on this chart. Everything. Why? Because I think crude just told us exactly where it turns bearish this week. It's right there. Bottom line, guys. Crude stays above 69 bucks, you're a buyer. Breaks below $69, you know what that signals to us? Uh-oh. That's a possible recession coming. One of the things about being in the trader funding program is you're automatically included in the Forex analytics community for a period of time, okay? But take a look at this. I want to show you guys that this is in our chat rooms, right? Not only do you have access to our trades room, you have access to our general chat room. The general chat room, this is where you're going to, have conversations with a bunch of traders about what they're seeing in the markets, how they're seeing it, what they're looking at. Who's Zelensky? That was an interesting one. That moved the market today. What levels everybody's looking at. But I want to show you this. This is the Atlanta Fed GDP tracker. That right there signals there's a recession coming. That chart right there. That's a Bloomberg snippet. That came out today. Now, again, you can find that in the Forex Analytics chat room. Now, here's the thing. If crude breaks below these lows, you start putting together evidence about the U.S. economy or about the global economy with certain things. Crude oil is going to tell us a lot on a break below that. All right, continuing on. We need to talk a little bit about the bond market and about what happened with yields. The bond market continues to explode higher. Look at the ZNs. This is one of those charts that we use every day with everything. We broke above the 200 DMA. You can see it here because yesterday, and just read the analysis on Forex Analytics, on the basic technical analysis. Now, keep in mind, I upload, me personally, unless I'm on vacation, Steve Valgaris does it. I upload the analysis for basic technical analysis on all 30 of these products every single day in the evening. So what you're reading here is you're reading my commentary. So over a couple of days, we were like above the 110 level, we'll put the 200 DMA in play. The 200 DMA was hit, and a move above this level would put the 111.15 level in play. No change in analysis. We were diverging intraday, which what happened intraday is we saw the 10-year actually pull back because we had divergent relative strength. It ended up pulling back. But today, following the data, we exploded past the 200 DMA. Here we are on our way to 111.15. Now, wouldn't you like to have that analysis each and every day, step by step? That's in the Forex Analytics platform. You can find it right there on all 30 products. Doesn't matter if you're trading Ethereum and you want to know what's happening with Ethereum, to Euro US dollar, to boons, to there's a lot of different products we cover out of those 30 products. Crude oil, the S&P, there's a lot of stuff. All right. Anyway, the bond market going back here is with bonds rallying, yields are falling. Yields are falling. The dollar is rallying. What does that mean? Well, it means the market is a little nervous about everything that's happening this next week. All right. Now, the big chart that I want to discuss is, you remember 2 weeks ago, we talked about Bitcoin being in the distribution pattern, and we finally broke the triangle. And guess what? We've completed the triangle breakdown. By the way, we've completed this triangle breakdown move. Not the maximum move, sorry. We completed the minimum so far. Maximum takes us even further, and I believe 75,000 is around the corner. But we are getting a decent bounce as we go into this weekend. I think the market assumes that Trump is going to treat them well and not plague the market with tariffs this next week. We'll see about that. But notice how the 200 DMA is holding very well in the Bitcoin market. Now I'm going to talk about Bitcoin in a few minutes because I'm going to review the trade setups that I discussed last week, and I'm going to talk about the trade setups of this next week. Now remember, inside the Forex Analytics community, if you want a day by day, update by update on what I'm doing, you can see my open positions, what I'm holding all day long, and what positions I'm getting in, when I'm getting out, the moment that I'm getting in and getting out. All right, not just myself, but a lot of other traders here too. But I'm going to give you 3 trade setups for today, or for this next week. But let's review the ones from last week. So last week, first setup number 1, I still want to short the euro dollar near 106 with a very tight stop. I was begging and pleading with the market to get up to 106. Unfortunately, we just made it to 105.30. So my short never got triggered. Now that didn't mean that I didn't short the euro on the way down the next couple of days, but for the basis of this video, that trade never happened. We never got close to 106. I was looking to get short at 105.75. We just never got up there. Anyway, so trade setup number 1, scratched, nothing happened. No harm, no foul. Trade setup number 2, selling the dollar yen at 151 and 152 if we see it. Well, you guys already know. I shorted it today at 150.95. Literally 4 pips from the highs. You can see it in the chat room. It's right here. Oops, that was the second trade I did. That was the third trade I did. Oh, maybe that was the day before. No, that was all today. I shorted the dollar yen on multiple occasions today. Every time it'd bounce, I'd sell it. Yeah, actually, that was trade number 4. And yeah, so my cost average was, I just showed it to you guys a little bit ago. There's 149.87, 149.87, and 149.83, 149.83. And oh yeah, you can see I've just been shorting the dollar yen multiple times up at those levels. So it worked for me. Did it work for you? Trade setup number 2 worked great. A third trade setup, Nikkei 225, short below 38,000. It broke. So here's the Nikkei. We broke 38,000 and we've been pretty much in free fall since then, right? So there we go. So trade setup number 3 worked. So 2 worked, 1 didn't happen. It's a good week. What are the 3 trade setups for this week? Well, for this week, trade setup number 1. I know this sounds crazy, but I am looking to buy the euro on a dip towards 103. So on the euro, a dip towards 103 to 103.30, that's basically this level. I'm looking for the euro to stabilize because I do believe we are developing a longer term rounded bottom, which also means that I'm longer term bearish the dollar, which is a true statement. So I'm looking to get long the euro somewhere between 103 to 103.30 this next week. That's trade setup number 1. Trade setup number 2. Now this is going to sound crazy to some of you guys because I've talked over the last month that I believe Bitcoin is in a big distribution pattern, and it has a long-term, that's a long-term top that is developing, and it has actually, in fact, broke down. But I am looking to trade Bitcoin on a bounce at 75,000. So 72 to 75,000 is my buy zone that I'm looking for going into next week for a bounce. Why? Because that was a massive, massive breakout point right here. Okay. So, and could it go all the way down to 72,000? The answer to that question is yeah, because if you look at these previous highs, it was a little bit lower. So I think there's a whole zone down here that you could be buying Bitcoin. That's why I said 72 to 75,000. I am looking for a bounce. So that's trade setup number 2. Now, by the way, that's not a hodl trade. I like to use Bitcoin as a trading vehicle. So trade setup number 3. Well, this one might catch some of you off guard, but if you guys haven't seen it, the euro sterling is near major, major support. So let me show you how major support this is. You guys can see clearly. Let's do this because I believe there's a big fib level here too. 50% retracement. This 82 pence level is huge, right? While we're above 82 cents, I'm going to try to get long as close as possible to 82 pence to get long because, you know, the thing is being a trader is trying to get into the best price you possibly can with the least amount of risk, where you know the risk is the most manageable. So if we know that the 82 pence level is huge support, well, we just know that we don't want to see too much below that. So while it's above 82 pence, I do want to be on the long side. All right. So guys and gals, those are my 3 trade setups of the week. And if you found this video beneficial to you, you think these videos are great, you get so much out of them, make sure you give us a thumbs up. And it's not just me, it's the team that puts this together, the editorial team, the social media team, gets this out to you so you guys can watch it. They put it in the newsletter. By the way, on Forex Analytics on our website, if you haven't subscribed to our newsletter, click where it says newsletter, subscribe to our weekly newsletter. We have so many great things coming out in this year that it's going to blow your mind. So to get on make sure you're on the mailing list, put in your name, email address, and you'll get our weekly review. And with that, we'll have the week ahead video in case you don't find us on social media. We send it out to you. You get daily updates on, key levels. So, check it out. All right, guys and gals, thank you so much for spending your time with me. Have a great and restful weekend. And I'll look forward to catching up with you on Monday on the F.A.C.E show. Have a great day. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.